Good morning. I'm Malcolm Grahamwood, and I'm at Studio Core London for my usual CEO interview slot. And today I've got a very exciting interview because I've managed to get hold of the co-CEOs of Reabold Resources, and Stephen Williams and Sachin Oza are here to talk to me. Good morning, guys. Nice to see you again.
Morning, Malcolm. Morning.
So it would be a good start, maybe, Stephen, if you could run through, for those who haven't been watching recently or in any great detail, perhaps you can give us a summary of the situation with regards to the requisition process that's just got underway, please.
Yeah, sure. So in simple summary, a group of shareholders has requisitioned a general meeting. Their intent is to remove the entire board from Reabold and to replace it with an entirely new board, and obviously we can run through our thoughts about why that's going to happen and the implications of that. The general meeting is set for the 10th of January, but we would encourage shareholders to vote well ahead of that. Voting will close before the meeting, so we encourage shareholders to go and vote immediately and to vote against all of the resolutions that have been proposed at the meeting.
You would say that, as I say, which is what I like to see. But more importantly, this is not the first time they've tried this particular requisition. Do you think you could give us an idea of why, when unsuccessful last year, they're trying again this year?
Yeah, sure. I mean, I think, firstly, what would their motivation be? Well, I think there's a recognition that we actually have a really valuable portfolio of projects and assets. Now, the requisition is trying to take advantage of the fact that the share price is low and doesn't reflect the value of the underlying asset base. That's clearly a frustration for all shareholders, including ourselves. We're extremely frustrated with where the share price is, and our job is to make sure that activity in 2024 drives that share price higher. So that's clearly what's presenting the opportunity in the eyes of the requisitioning shareholders, and what they're after is access to our asset base, our highly valuable asset base, without having to pay for it. But then on top of that, there's another element here, which is the cash that's in the business and coming into the business. So investors are hopefully aware that we've recently received the second tranche of the cash payment that came from Shell for the acquisition of the Victory asset from us last year. And we're expecting to receive the third tranche early in the new year. So not only do we have a valuable asset base, we also have a significant amount of cash. It's probably worth noting that the first requisition attempt last year was pretty much coincident with the receipt of the first tranche of the payment from Shell. So there's clearly a pattern developing there where the requisitioning shareholders or the proposed directors are looking to get access to that cash balance as well as our asset base. And we have some suspicions that due to from fairly extreme conflicts of interests, we don't think we could be confident that the proposed directors, should they be in charge of the company, would use that cash for the benefit of all Reabold shareholders. Again, something we can touch on in a bit more detail, I suspect.
I'm going to touch on each of the sort of three key assets I think are important. And also, these three are all, as you to a certain extent already alluded, to do with timelines of when cash is coming in and when activity starts in certain projects. What I'd like to do first of all is get the Daybreak thing sorted out. Sachin, you've spoken to me before about the fact that something I didn't know, that the requisitioning shareholders have a significant interest in that, on which obviously you're interested in as well. So if you could explain what's been going on there, and maybe say what you're interested in and what they're interested in, how it looks like it's unfolding in this process.
Yeah, certainly. So Cameron Satar and Portillion Capital are investors in Daybreak. And as you'd mentioned, Cameron Satar is a proposed director as part of the requisitioners' resolutions. And he has on the record stated that he personally and through Portillion have invested £2.7 million into Daybreak. And so it is a very significant holding for him in something that he is looking to ensure that he can extract value for that holding. Reabold's position is that its Daybreak holding is a non-core asset. Now, although we also want to extract good value from it, it's not an area that we would like to deploy further capital into, because we know what the core assets are in our portfolio that we need to drive forward in 2024. And just to reiterate that again, that's West Newton and that is Colasanto. Now, in addition to that, we have twice been proposed by Mr. Sattar and Portillion Capital to swap their interest in Daybreak for shares in Reabold. Now, this is not an attractive proposition to all Reabold shareholders. It might be an attractive proposition to Portillion Capital and Mr. Sattar, but it is not in the interest of all shareholders. And therefore, as Steve was mentioning, that is a conflict of interest that is very significant in our view and something that we would not pursue, because that is not the strategy and that is not where value is to be extracted, to be reflected in the share price as we move through 2024.
Just to confirm something in there, you pretty much said it, but the requisitioning shareholders say that you've actually missed 2 offers for Daybreak Oil and Gas, which sounds odd to me, because you've got 20%, they've got 20, 30% or whatever it is. And you might have accepted, you said it's not a core holding. You might, if you'd had an offer on the table, you might have accepted that. So what's the background to that?
Yeah, so this is, again, an involved situation. So we first mentioned the conflict of interest associated with Mr. Sattar and Portillion Capital. That is further exacerbated by the fact that, as you pointed out, there was an offer made to invest in Daybreak for another shareholder essentially to come in and make a substantial investment in there. And there would therefore be 3 material shareholders in the entity. So just for the record, as it stands currently, Portillion Capital and Cameron Sattar own over 40% of Daybreak, and Reabold owns over 40% of Daybreak. So clearly we're the dominant shareholders in that. Now, this party that was interested in making an investment into Daybreak was Zenith Energy. And I had meetings with Andrea Cataneo, 3 in particular. And because Daybreak is a publicly listed company, I felt that it was important that any follow-up that had taken place about interest from Zenith into Daybreak was done through the right channels. So after some encouraging early meetings, we didn't hear anything back from Zenith. I approached them through their broker to see if there was any dialogue that was worthwhile carrying on, and we heard nothing back. So that really, from our perspective, was the end of that matter, but it's clearly not the case that we are not actively engaged with parties that would be interested in making offers for Daybreak. And I should say that that's not the only line of investigation into value creation, creative opportunities or liquidity events that we're looking at for Daybreak. We're looking at others as well, and we continue to actively do that. It is frustrated by the current position, given that the 2 largest shareholders are engaged in effectively a proxy battle, but that doesn't stop us attempting to find a way forward.
Thank you for that. And so you've mentioned Andrea Cataneo, and he is the current CEO of Zenith, but he's also proposed to be, should the requisitioning shareholders win this battle, the CEO of Reabold. Now, does that concern you at all? Would it be normal for someone to be CEO of both these companies?
Well, I mean, I think aside from the general point of there being an individual proposing to be the CEO of 2 competitor companies, look at the very specific point with regard to Daybreak. So Zenith had expressed an interest in doing a transaction with Daybreak, and was talking to Reabold about this. Right now, that interest seemed to disappear, presumably because a new plan was hatched, which was to get control of Reabold's interest in Daybreak via this requisition process. But then how can anybody possibly negotiate a deal between Reabold and Zenith when it's the same CEO of both companies? It just doesn't make any sense. So again, this doesn't strike us as being to the benefit of the rest of the Reabold shareholders. It just doesn't make any sense. And the conflict of interest is extreme.
I get the point there. But you've got some other concerns. I know that you've voiced in some of your comments that regarding the proposed directors of Reabold, if they win, and the corporate governance of this. Would you be able to expand on that at all?
Yeah, well, again, this comes down in part due to this dual CEO issue where he wants to be the CEO of both companies at the same time. I mean, Reabold and Zenith are competitor companies. I don't think it can possibly make sense for the same individual to be running both businesses. In addition to the specific issue around the Daybreak potential transaction, which we've talked about, I mean, just on a general go-forward basis, how does this work? So let's say that the CEO becomes aware of an interesting project or an interesting asset. Which company gets to go for it? it just doesn't make any sense. You can't have this situation where you've got a CEO of two different companies that are effectively competing in the same business area. And then we've also seen some pretty erratic behavior from Cameron Sattar as well. So, for example, I mean, just a couple of weeks before we got the requisition notice from him, he wanted to have a meeting with us. We have a meeting. He explains how he wants to put the previous requisition behind us, how we should work together going forwards constructively, and was even suggesting he wanted to put out a statement of support for the current Reabold board. So this is what we were hearing, and then 2 weeks later, we get this requisition notice come in. I mean, this sort of behaviour is erratic, and I don't think is to the benefit of Reabold to have directors that would behave in that sort of way.
And I would just like to add one other point on the proposed directors. Not only is it the case that Mr. Andrea Cataneo would be a director of Reabold and of Zenith, the current chairman of Zenith is also a proposed director for Reabold. So the egregious nature of the governance is so extreme that it's hard for us to overemphasize how cautious we are and how we would caution shareholders to be in such a board type situation.
Understood. Right. What I'd like to do now is have a quick word about the other team. We've done Daybreak, and I'd like to talk about Colasanto, and then I'd like to talk about West Newton. And both of these are, to a certain extent, timeline situations like we spoke about before. So first of all, on Colasanto and LN Energy, I even had my concerns to a certain extent a few months ago, which is why I came to you to talk it through. And then when we spoke on the CEO interview, I thought you explained it in some detail. And since then, things have moved on. You've increased your stake, you've upped the option, taken up the option. And you've also put news out about, how quickly things are going to get through and how it's going to be done. And of course, yesterday with the committee and so on for the detail of the data. So perhaps you can give me an up-to-date situation where you think it is in terms of timelines on LN Energy and Colasanto, please. Maybe Sachin can go.
Yeah, that's not a problem. So Malcolm, just as a reminder, in case people hadn't listened to the original interview, I'll just give a little bit of background on that. So we structured a transaction to get involved into the Colasanto project in a certain way. But please bear in mind that we actually looked at this project 6 years earlier and chose not to make an investment in it, particularly because of the regulatory environment in Italy, but also because of the scope of the project and the footprint that it had in relation to the regional area. And both of those really put us off. And we recognize that there are concerns about the regulatory environment in Italy, but the project in scope has changed significantly, such that we are talking now about a full field development that's really a transition fuel through micro LNG, but also the overall backdrop in Italy having changed significantly as they are seeking the need for security of supply as a key priority for the country. So I think that is very important to stress how much the overall backdrop and picture has changed for the project and for Italy generally. But let's go through the specifics of the project and the investment that we've made to answer the question that you've asked pretty directly there. So we structured our investment to go through in sets of tranches that were essentially driven by our, gaining comfort in the regulatory process that would allow us to increase our stake in such a way that if we saw progress happening positively, we would increase the stake. And that very much has happened. And that progress has happened in two ways. So as we've been involved in the project, the first is from the regional government, and the regional government was looking in the first instance at a long-term test program or an early production system that we were looking to progress. And they essentially provided this letter of no objection from UNMIG, which was incredibly positive in relation to the long-term test or early production. So we also needed to go to the region to ensure that the region was comfortable with the early production, and that is what you'd referred to a little earlier. So the committees that are in place have been put together by staffed from people in the local university that are confident and capable in the environmental impact and environmental study, and will be reporting to the regional government. So their oversight on this project is very important, and we have been working constructively in order to put that team together. So it's clearly moving in a way that the local government is trying to have all the pieces in place for the early production phase. But the early production phase goes beyond just the fact that we're getting local government buy-in. It's actually a way of getting early revenue in 2024. And the early production piece is the generation of electricity from, roughly 3 megawatts. That will, approximately be about €1 million of revenue a year. So it's significant, and it would show that this project can move forward in a very quick way, and also has buy-in from the region. But the full field development, which is the micro LNG, is the concurrent plan that we're working, and that was the submission we also announced yesterday in relation to a very detailed environmental impact study that is being reviewed by the VIA Commission. And given the feedback that we've had with them, and LN Energy has been engaged with them, we think that's all been very, very positive. The final point to say is that the most significant lead in this project is Italfluid, which is an EPC company, and it's a very significant service company in Italy, with the headquarters not far at all from the field. And so there is a much more Italian nature and Italian feel to this project than was ever the case historically. So it's a project that we think can move quickly, we think is well placed, and we really are very excited about it for 2024.
Excellent. And I seem to remember that Italfluid are also working on a similar process for sound energy. So it's not as if they're taking a sort of new bit of kit and never having been used before. Right, West Newton. And I know that there's not too much you can say, but I would like to ask you the direct question is that you have said in your statements that drilling is ready to go for in 2024, to be honest. So does that mean that all the kit is ordered or being ordered and you're going ahead as if it was going to happen? Or, as people are concerned about, Rathlin isn't funded and doesn't get funded, and where on earth? People, I think, are justified in being concerned about this being a big time asset for you and for other people, which has always been, coming the next year and so on. But now you seem to be indicating that things are moving forward. Can you give us some definition on West Newton?
So look, I think the timelines have been extended, which is a frustration for everybody. Now, in a large part, that's because we've sort of had to sequentially go through a number of steps. So firstly was interpreting the data from the previous drilling and testing that we've done. That led to a conclusion that one of the most important things we need to do with this asset is to drill wells with oil-based mud rather than water-based drilling mud. That then required additional environmental permitting. And that is an extremely slow process in the UK onshore at times, and that was extremely frustrating. So we had to wait to get that permit in place before we could go and address the Rathlin funding situation, because you can't really get funding into a business until the permits are all in place and ready, and that risk has been taken away. So that was achieved. So we now have all the permits in place. So everything is ready to go from that perspective. And we're just in the process now, or rather Rathlin is in the process with Reabold support of securing the funding to get the Rathlin share of the well finance, and then we can get drilled as early as possible next year. Some of the longer lead items have been purchased, so the timeline from the point of getting the final financing in place to drilling will be quite compressed. So we're pretty optimistic and excited about the prospects of the West Newton drilling this year, next year.
Good. Now, I think that maybe the best bet is to finish up on those two by saying that if there was a sort of a question that I see coming across in the requisition process, it's a situation that says you put a lot of money down into both Colasanto and West Newton, and has it all been used in order, particularly in Colasanto, to further develop the assets? And are you content with the way that you've so far invested in particular in Colasanto?
Yeah, so I think part of the reason why this question is going around is because there was a sort of erroneous claim made by some of the proposed directors, and they've either misunderstood or not read the RNS that related to our initial investment into the Colasanto project. So what we did is we acquired part of our interest in Colasanto by buying shares in LN Energy from the LN Energy shareholders through the issuance of Reabold shares to them. Now, the claim that's come from the proposed directors is that those Reabold shares were initially invested into LN Energy, and then the directors or other shareholders in LN Energy have somehow extracted those Reabold shares back out with no value. And that simply isn't the case. We purchased shares in LN Energy from the shareholders with Reabold shares. So that value has never gone into the project and was never supposed to. It was there to acquire an interest in the project. And where that might be a bit confusing, to be fair, for people, is the subsequent investment that we made, which was the exercise of the final option, which is a mix of cash and shares, that has gone into LN Energy. So that's different, right? That's a subscription into LN Energy, but those shares are still in LN Energy. There's been no strange removal of the shares by the other shareholders or the directors, which is sort of the claim that we've heard coming from the proposed directors. So I just think it's important to clarify that. And I think the proposed directors need to go and relook at the RNS that we put out that explains all of this before they restate that claim.
Right. I think we're nearly there because we've done Daybreak. We've spoken about Colasanto. We've spoken about West Newton. What if you were saying now, and the vote was decided up, and you've just been successful? Where what's the strategy now going forward for Reabold?
Yeah, so really 2024 is this exciting year, and we've run through each of the pieces, but we'll just sort of summarize it now. So first of all is the drilling at West Newton, and the drilling of that well, I think, is a key aspect of moving forward in that project. But what we're also looking at are ways that we can get a single well development underway that starts generating revenue earlier than currently exists or than has currently been communicated. And that plan, I think, is one that will be able to demonstrate the fact that you can take, as you'd already pointed out, investment that is in West Newton and start generating revenue from it. Now, clearly, the big prize is the full field development plan that we have in place for West Newton, but at least we can work our way towards that in a staged manner that starts generating revenue early. Now, as part of that process, I think what's important to also stress is just because timelines have taken, or have been extended and have been much longer than we would have liked, we have been engaging with the regulatory side of things, government relations side of things, and civil servant engagement side of things. And these stakeholder engagements, I think, will put us in good stead as we go through 2024. That's something that the current or proposed directors do not have knowledge of, do not have intimate knowledge of at all, and is something I think that is going to be an important aspect of being able to leverage the work that has gone on in the background during 2023. So West Newton itself, I think, has a very, very exciting year ahead of it, and we're looking forward to updating the market on that. Colasanto, we've already run through in terms of the early production phase and then the full field development phase as well. There's a quote that is, Malcy, that is always be first in the queue to be second, and that is the case for this micro LNG plant. It seems to be progressing very well elsewhere in the prototypes, and I think in Italy it bodes very, very well for that project. So both of those mean that we think much better value will be reflected in the Reabold share price for those projects than is currently the case. And we urge shareholders to stick with the current board, the current management, vote against all resolutions, because we think we are well placed to deliver value next year.
Well, that was going to be my last question, was to give you the chance for a quick freebie to ask people to vote for you, which you've already done. And Stephen mentioned at the beginning as well. Just before I wrap up, is there anything that I've forgotten? Is there anything that you need to get into the marketplace whilst you've got lots of viewers waiting and watching to see what you have to say? Or are we just now going to move to the meeting on the 10th of January? Anything else?
I don't think there's anything specific. The only thing we would like to stress, of course, is that we are coming into the holiday period now. So please, 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 we would urge shareholders to get their votes in early so that they can be counted. With the number of holiday days between now and the 10th of January, I think that's just something we would stress and urge shareholders to be very mindful of.
Okay, understood. Thank you very much indeed, both of you, for answering my questions, and look forward to watching the process over the next few days. So my name's Malcolm Grahamwood. I've been lucky enough to be interviewing the co-CEOs of Reabold Resources, Stephen Williams and Sachin Oza, and it's probably my last CEO interview before Christmas with Core London. So thank you very much for watching, and look forward to seeing you again. And happy holidays to everybody. Bye now.